So up to you how you decide to do things here. It's your choice. I like the 2-to-1 better because it's like a little bit more safe and you still have some good win rate and everything around. But you could do the other way also. Alright, so this is how the trade worked. I'm a little bit late to show you guys everything here. I wanted to shoot this before, of course. I didn't record videos before that. So I'm just going to go quickly through the chart and step-by-step process of how this trade unfolded. And here we go. So first things first, this is, as I said before, a breakout trade. So we'll trade a breakout in the market of a certain range. And the range I was spending this is a long time. This is like since December 5th, which is like a long time ago. And we had this range on GBP, GPY, okay? So price went up and down. So the reason I said this range here with the line right there is because we went up, right? We came back down, and then we just went here again. So we didn't really go beyond that high ever before. And this right here, right, this pretty big wick and this kind of, it's like a price action sign that we are not gonna go beyond that point. Okay, it's a pretty strong sign of rejection of this level by the sellers. So not gonna go beyond that probably. And it could happen, we never know. So that's why we wanna kind of look at the price when it does, what happens. But that's just like our first sign for this trade. Now we see price coming back down, coming back up in the range, coming back down, coming back up. And the range still continues here, of course. What you're looking for is a break of the range, because price can only range for some time. It's not going to range forever. There's always going to be a breakout in the market somewhere. And the longer we range, the more likely we are to have a breakout. Okay, some people say, oh, the more we range, the more the support and resistance level are effective and strong. I don't believe that, because the more the market range, the more likely it is to break out. So that's what we see in that case. Now what I'm doing is, as I'm waiting for price to kind of break the range and close beyond that range, either to the upside or the downside. Now this is the daily chart here, and as for this range on the daily chart, but you can always go and trade on a lower time frame. For me, that's totally fine. So because I was there and because this was on a Friday, right, I decided that I would be trading this on a lower time frame. So the range is like looking the same here, same thing on a 4-hour chart. It's very similar. It's just a little bit more kind of spread out and weird, but it's the exact same range. You can trade on this on a 1-hour chart if you want, less reliable, but still working out. Okay. So what you do is you want to wait for a candlestick breaking outside of the range. As you'll see, our low is here. Okay, we have another low here. Pretty much this is like the low. So as long as it breaks below my line, it's broken out of the range. Okay. And I'll show you how to avoid the fake breakouts too a little bit later. Okay, so breakout here. What I will do is I will put my entry below, but I want to check one more thing, is to make sure that we are not going to come back or not likely to come back in the range. I look at the RSI, and this is something that people would not agree with. Most people, it's like something that pretty much no one that I've seen does, only myself, is I look for the RSI to be oversold if I want to sell. Okay, most people say, oh, the RSI is oversold, let's buy. But that doesn't work that way. That's a recipe for disaster, and it doesn't work really well. So what I do is I do the opposite of most people. I look at when the RSI is oversold, I sell. When it's overbought, I buy. Okay? And so you'll see that when price broke the range, right over here, or actually when price closed below the range, right over here, you see that the RSI was below 30. Okay? 30 is the line here, was below 30 right there. And that's a pretty good sign that price is likely to go down more, because we're already oversold. We have a strong push to the downside, and that's a really good thing. So I'll just kind of place my entry here below the low, stop loss beyond the high, and reward to risk in that case of 2-to-1. Now you have two things to think about here. So you can do a fixed reward to risk. 2-to-1 works fine because the stop loss is quite small. The other thing you can do is you look at the height of your range. So I'll be taking my tool right there. And I'll be looking at the top of the range all the way to the low. Okay. And that gives us like roughly, give it some room, roughly 300 pip, which is good. So what we could do is we could do this beyond the range. So we could go here and our take profit would be around there. Okay. So around this level here, which we also reach, which is a good thing. So up to you how you decide to do things here. It's your choice. I like the 2-to-1 better because it's like a little bit more safe and you still have some good win rate and everything around. But you could do the other way also. Okay, so price went there pretty quickly. I didn't check the trade after I placed it. It was just like went outside as you saw. and that's it. Okay, so I hope that makes sense. Let me know your thoughts as always in the comment section, and let me know if you took the same trade.